All right, good morning. So I ended up bumping out yesterday around 41.20 ish. I've made my weekly goal on that. I got kicked out of my Euro trade as well when it ended up going positive yesterday. So I'm sitting in nothing at the moment, and I might end up sitting that way throughout today while we have a Fed rate decision day. Um, my issue was yesterday is that we were doing well. Like we do have the 30-minute and the 1 hour downtrends that are our higher lows. I'm actually a bit surprised I haven't seen the 30-minute uptrend signal in the rally since you know the 30-minute time frame was closing down at like 41.12 at one point. We're back up here to almost 41.50. So I definitely thought I would have seen a 30-minute uptrend signal by now. I'm guessing the degree at the drop is what's kind of holding that back. Um, I will say all the volume, we almost had a 2 million contract day. All of that volume was in the down move. Very little of that volume, um, you know, maybe a quarter of it or so was in the up. So the majority of the bulk of that volume was certainly to push the market lower. Um, and then it just died off. And when it died off, it was able to just kind of move up without a whole lot of resistance. So we got the 1 hour is also a higher low, but then we got the 2, 3, and 4. Those were lower lows, saying that we could have gone down further. And for a while, I had said the 6 hour needed to be below. I think it was like 41.21 or something. It needed to be below that to be a lower low. We had it going until like the last 30 minutes or so, and then it pulled up higher, and it is now a higher low, not by much, but a little bit. Since that, we have pushed up so far. So my issue of trading into today is, now we're almost at it, but the 30-minute, 1 hour, and 6 hours said now we got to come back up now. Um, and the 2, 3, and 4 said, we could go up a little bit, but we can plenty go down. So it kind of just, certainly a little bit of a fighting on the trends there. Um, and so with it being a Fed rate decision day, I just don't know that I want to trade, because what are we trading into, right? So we'll have that ADP non-farm employment change here in a couple minutes. Um, some ISM, but ultimately it's going to be the later to say with the federal interest rate. I think if they come across a little dovish, it could cause a slight pop in the market. But my issue would be is what are we pricing in, right? So it's almost believed to be guaranteed we're going to get a 25 basis point rate hike today. Um, so if we get that, uh, there might be initial reactions to it, but I mean that's kind of already priced into the market. Additionally, we have already been pricing into the market rate cuts and dovish, like a dovish perspective. So if we get a dovish perspective, I don't know that we're going to get. I certainly think we'll get an initial pop, right? Like if that comes across, but we've really already been pricing that in. So, and even with that belief going into it, we have failed to get above 4,200 really. So what I don't know what we'd be pricing in if it comes across dovish, unless they do talk about definitely rate cuts. And then what I could see is it kind of like defeating the. I'll just skip to it. As you can see, the real bearish kind of sentiment. Um, at one point yesterday when we got around 4,100, this had dropped to about 59% net short, and you could see the daily change was pretty significant in people going long at 4,100. Um, so I guess my concern here is that there's more risk to head down going into this rate decision than up, because if it's beneficial to stocks, I feel like we've already been pricing that in, so it's not anything new. It could further the cause. It could cause people to accept where we're going. We could temporarily go up above 4,200, and maybe if we come back here, like I've drawn a kind of a funnel with the purple lines on what our price action has been in this. So certainly, I mean that's kind of high, but certainly maybe we could get up to 4,300 or so, um, before we actually have to have a leg down. It's certainly possible. I just see that because I think we've already really priced that in. The only surprise is something that's going to hurt stocks. Now we just had a bank failure, so the last time that we had to do a Fed rate hike was on right after a bank failure also, and I feel like they were a bit dovish because of that. So yeah, we'll see what happens. That's probably the reason I kind of want to stay out of the market for the most part. I'd probably look for, if we pop up, I would kind of look for like trends to max out, and then once they do, I would probably just go short again. Um, I think if the move pushes down below like 41.25, which is around where I got out, 41.20 ish. If I see it pushing past that with a lot of momentum, I'll probably jump into the short there. In terms of going long, um, I mean, maybe temporarily if I think that the day is going to end up green, and I would probably cash out at the end of the day if it comes across kind of dovish. Jump into whatever happens today from it, and maybe just kind of like ride it overnight a little bit, but cash out before I go to bed if it's high, and not lead into tomorrow morning. So, or maybe even carry it into the open of tomorrow's trading day. Looking at earnings, Qualcomm's like the only major name I think today. Most of the other companies are pretty small, so nothing major. Um, and yeah, that's about it. So a little conflict in the trends with the 30-minute, 1 hour, and 6 hours saying we got to go back higher. 30-minute, 1 hour because they've been violated, and the 6 hour because as a higher low we immediately bounced off of that. But the 2, 3, and 4 hour are saying no, no, these are lower lows. We have more room to go down once it continues down that pathway. With the lowest of those being the 2 hour, which could, if we were going to just kind of follow along the bottom of that, we could head back down to about 41.10 today. So safe trading. Remember your risk management plan.